Hi, everybody. Welcome to another monthly market outlook by Atlas Wealth Management. For more information on our services, please go to our website at atlasbuildswealth.com. We also have some articles, and you could also download a free retirement calculator. Welcome to July's Market Outlook by Atlas Wealth Management. I'm Ron Lang. Let's review the S&P. Since we put together our video here at the beginning of June, end of May, we were looking for a rise in the markets, but just in case the European debt issues got worse, we were looking for this range here. And obviously, we got thrown around like a economic ragdog here by the European debt issues. We hit a pretty strong resistance here before we pulled back by the Fed inaction, and then we went higher and closed at our highs on Friday, June 29th. So what are we looking forward here in July? Well, first of all, June was the end of month, end of quarter. So this could have been partly a short squeeze here, but also the money managers were looking to potentially sell positions and or take positions to increase their performance. July, we have big earnings season coming up, and it is expected that some of the guidance will disappoint. Per our article in the beginning of June, we were looking for a 5 to 15% increase between now and the elections. So we are looking for a pullback here to the 1325 level before we go higher and test the 1400 to 1425 level. So we're looking for a healthy pullback before we go higher before the end of June, pending no major EU debt issues that come to the surface. Headlines throwing us around. Economic news will be moderate to bad, but we'll be looking for the market to go up, thinking that Fed will come in, step in to stimulate the markets. Okay, let's check out the market leaders. We are looking at the Apple chart, and as we can see here, after making a new high in the beginning of April, we've basically been dipping down here. Came right back down to a demand area where the price bounced out of it. Now, Apple is printing and minting money, folks. They're not going anywhere. We really don't look at the price of this stock going below 500 unless that there is some serious market weakness. If we can continue basically being range bound for a while, we look at Apple still as being a big leader. Apple is also a large percentage of the NASDAQ and the Qs. So certainly it's moving those market indices also. So we're going to look at a few more of these market leaders, specifically ExxonMobil. ExxonMobil came down from its top. We had some tremendous above average down volume here. We're looking for it to come down to the 74 to 75, 76 area here over the next couple of weeks with some other market weakness. Also, the price of oil has been going down, which has been hurting the entire sector. But overall, ExxonMobil is still a very good stock. I believe they just raised their dividend. There's probably more upside than downside between now and the end of the year. Microsoft, after hitting some nice new 52-week highs, had a double top, and you can see the M formation. Technical analysis does not lie here. And it came down to this nice demand support area also. So we're looking at probably no more than a 75.50 bottom here. But this might look like a good area to buy. Again, Microsoft's got a lot of money on their books, and certainly they're going to be looking to invest it into possibly some buyouts or mergers. Those are some of the rumors, but I think a lot of investors are waiting for either them to help grow this stock either through buyouts or mergers, possibly a spinoff, or what you could also see is them potentially raising their dividend for more people to want to get into the stock to help raise the dividend yield. Walmart, after their whole bribery issue back in early April, basically has bounced back very nicely, made new 52-week all-time highs, and has continued upward. It doesn't pay much of a dividend, but a lot of people like to go into the discount retailers, considering Walmart is the largest in the world, but they like the discount retailers because they feel as if the average consumer isn't going to go towards the higher end, they're actually going to go towards the discount. IBM IBM came back off of some highs into this demand area here. We're looking for a lot of consolidation. IBM is the number one market leader for the Dow Industrial stock, so certainly the market is going to push this stock price around a little bit. But IBM being a leader, they're going to be looking for some serious earnings and guidance when they release all their earnings in July. And this will certainly not only push the stock, but I would assume probably a good part of the market, especially the techs. Let's look at AT&T telephone. This has gone negative correlation to the market. As the market went down in May, AT&T went up. This has just been a terrific run for AT&T for a while. In full disclosure, I am actually in this trade. And one thing that we are looking for here is there's probably still some more upside in AT&T, especially with a 5% dividend yield, paying about 44 cents a quarter. What we're looking for here is basically a lot of range-bound action, potentially between $32 and $35 between now and the end of the year. AT&T is a pretty good safe haven stock. There's not a tremendous amount of growth with AT&T, but again, they are printing money. They don't have a lot of debt on their balance sheets. They have an excellent dividend, and people like to flock to their stock. GE, another big market cap leader, had some breakdown here. This is a head and shoulders pattern, as we can see that there was a breakdown here below 1836. This might come down to as far as the $16 to $17 level, where it might rest and consolidate. GE is another market leader. A lot of people like to go to it as a safe haven too, despite the fact that their dividend yield is just average at best. So let's kind of jump down here to Procter & Gamble. Procter & Gamble fell pretty hard, which is a big, probably one of the biggest consumer products companies out there. Came down to this uh, demand support area here where it's really trying to find some direction. So if it goes below 61, there could be a breakdown in this stock here below 60, but we believe it'll probably rest and consolidate in this region here before it goes higher after the summertime. One of the things that we're looking for here is to see how some of that geopolitical issues, how they kind of affect our markets. And if it drastically affects our market, certainly Procter & Gamble will be affected too, and it will go below 60. Let's look at McDonald's. McDonald's was on a terrific trend for a while. Once it broke trend here, this long-term trend, the stock really broke down. We're looking for it to fall around $84 before it goes higher. Remember, McDonald's is very, very integrated into the global market. And as the global market kind of slows or continued negative news comes out, we are looking for McDonald's to not make new highs. I think it's going to be a while before it gets back up to 100 again, but it could consolidate between $80 and $90 for a while. Home Depot, even though we had a break of the long-term trend line here, we are still looking for Home Depot to basically meander along here between $44, $45 and $50, perhaps even going to new highs over the next few months. Why? If people do believe that there is a looming recession, people want to improve their houses on their own. So you're going to find that Home Depot is going to continue to do well, even in some slow and uncertain times. Let's look at the transportation index. Uh, transportation index never hit our target here of 55.43. But one of the things that you want to see here is where it made new 52-week highs up here around 5,600. When the S&P was making new highs, the transportations were not, and typically the transportations lead the way. This is the old Dow theory about the transportation index. When the transportation makes new high, we're looking for the S&P to make new high. If the S&P and the Dow do not make new highs, they do make new highs and the transportations don't, then the S&P and the Dow will follow the transportations, and that's what we have found here over the last month. So look for the transportations to hopefully rest and consolidate here in the 4,800 range, perhaps even to go a little bit higher to 5,200 range. One thing that we want to look for is eventually a break of this 5384 5400 level for it to really move the markets. And a lot of that is going to depend on Europe and the presidential elections coming up here over the next 5 months. And that is a review of the market leaders. You can go to our website. We've posted some new articles, including a second half report on undervalued and oversold equities. Our website is atlasbuildswealth.com. Thank you for attending another monthly market outlook video by Atlas Wealth Management. Visit our website at atlasbuildswealth.com for more articles and also other event dates. Thank you for attending.